Top Glove Corporation Berhad was established in 1991 as a small local company with a single manufacturing and production line for gloves. Their business is currently the largest manufacturer of rubber gloves in the world, with activities in production and marketing in Malaysia, Thailand, Vietnam, and China. To fulfill demand in both the healthcare and non-healthcare sectors, Top Glove makes a wide range of gloves in addition to non-glove products including condom, face mask, dental dam, fitness band, and home goods. Top Glove, top quality, top efficiency.
For the liquidity ratio, Top Glove has two type ratio. First, Top Glove Corporation has a strong ability to service short-term obligation with a current ratio of 2.01 times in 2020 and 1.98 times in 2021. Second, Top Glove net working capital improved from 2019 to 2020 but decreased in 2021. Top Glove has a strong liquidity ratio, allowing it to expand quickly without taking on a new debt or investor. So we move to the activity ratio. Activity ratio assess a company's inventory management practice, which are essential for financial health. Top Glove Corporation's inventory turnover increased from 2019 to 2020, indicating that the company is selling goods quickly and has considerable demand. However, in 2021, the inventory turnover decreased from 3.68 times. Top Glove average collections period has improved from 44 days in 2019 to 39 days in 2020 and 12 days in 2021, showing a positive impact on the company's financial health.
Net leverage ratio. For the ratio in 2019 Top Glove Company, debt ratio is 55.10%. In 2020, the ratio is 28.89% and 26.19% in 2021. The lowest debt level after 3 years is 2021, while the highest debt level is in 2019. The debt liquidity ratio for Top Glove Company for 3 years has been less than 1. In 2019, it showed 0.54 times, while in 2020 and 2021, it showed with the same ratio, that is 0.04 times. Overall, Top Glove portrayed a good performance in its leverage ratio. The strong positive number in 2020 and 2021 indicates that the company has enough cash on hand to expand quickly without taking on new debt or investor. It may support its own expansions with the proceeds from its current operation.
Profitability ratios are financial indicators used by analysts and investors to assess a company's capacity to create income compared to revenue, balance sheet assets, operating costs, and shareholders' equity during a given time period. They demonstrate how well a firm uses its assets to generate profit and value for its owners. For gross profit margin, the measurements show how much the company earns in gross profit for each RM warning it sold. The figure above shows the gross margin of Top Glove Corporation from 2019 to 2021. In 2021, the company had the highest percentage at 67.86% compared to both 2020 and 2019. 2021 is a great year for the company because of the efficient management. Next, for the net profit margin, it shows how much profit you can get from each ringgit sales after deducting all costs and income tax. The figure above shows that the ratio to net profit margin will increase annually from 2019 to 2021. This means that the company can manage low cost and low cost operating costs without problems. Market value ratios are financial indicators used to assess the worth of publicly traded companies' paid equities. These ratios are mostly used by investors to determine whether the current market share price are in line with the company's performance. As a result, they are accurately valued in the market, whether they are trading at a greater or lower price. Therefore, the figure above shows the top Glove Corporation market value ratio in the year 2019 to 2021. Earnings per share are expected to rise from 14 cents in 2019 to 60 cents in 2020. In comparison to 2020 and 2019, the earnings per share in 2021 was the greatest at Rp1. The good performance was in 2021. Higher earnings per share can suggest that the company is more profitable and has more money to deliver the shareholders. Next, the price-earning ratio shows the value of the company's market ratio. This helps investors analyze how much they should pay for their stock based on their current earnings and can also show whether the market is overvalued or undervalued. The figure above shows that prices were down 2% in 2021 compared to 31% in 2020. However, the price in 2019 is 1%.
Okay, so in conclusion, based on the Top Glove Corporation's annual report for 2021, the revenue will increase over 200%, which is from 7.24 billion in 2020 to 16.36 billion in 2021. For net profit, there will be an increase from 2.17 billion in 2020 compared to 10 billion in 2021. As a result of its adherence to several tax system, Top Glove Corporation's profit before tax can mislead comparison performance. As a result, the preceding line item, profit before tax, can be better considered for comparison by removing the variable nature of taxes. Next, the total asset will increase compared to 2020, which is 8.71 billion, while in 2021, the company's total asset is 9.78 billion. Generally, rising total asset in Top Glove Corporate indicate that the company is expanding. Also, the capital expenditure was increased from 2021, which is 1.36 billion, compared to 2020, which is 0.86 billion. The firm earnings per share and increased efficiently from 21.9 cents in 2020 to 95.9 cents in 2021. Net cash flow generated from operation also increased from 3.46 billion in 2020 to 7.86 billion.